Oh, thank you very much, Brecht. It's quite an honor to be here. Thanks for having me. It's, of course, an honor to be in front of such a distinguished group of people who are wondering if the current monetary system will survive. Of course it won't, but we never know when it all will happen. Nothing will survive in life. Everything has a cycle. And at some point we're going to have a new system, especially after being at the peak of a 75-year credit cycle. So we have so much debt that at some point something is going to happen, something very dramatic. And maybe it's already happening. Yeah. Exactly. I've been positive on the dollar for the last 10 years because when you had the global financial crisis in 2008, it was really a crisis in the dollar. There was a shortage of dollars. It had to do, of course, with subprime mortgages and everything, but everybody was borrowing dollars, especially euro dollars, which is offshore dollars, to invest in all kinds of things, and in subprime mortgages was one of the things. And then, of course, with the carry trade, leveraging it up. And so when subprime mortgages went wrong, and nobody believed it could go wrong because house prices had gone up for 100 years, what could go wrong? Well, they gave mortgages to people who had no income. And then it went wrong. And then, of course, we had this huge crisis. The next one. Because the US dollar is the center of the financial system. We have 88% of all the transactions are in dollars. We have most of the FX reserves in dollars. It has gone down from 70% to 60%, 62%. But that's because the FX reserves have declined. That's all has to do with what happened in China. See, China, we had the Asia crisis in 1999, and then we had a new system with no name. And that new system required countries to build up their FX reserves. So we had a huge increase in FX reserves. And of course, they were more or less forced to buy US treasuries. So the foreign holdings of US treasuries went up from 13% to 35%. And that's turning because FX reserves are declining because world trade is shrinking. And of course now the surplus of China is collapsing. The current account surplus is probably flatlining, which means that the percentage of foreign holdings in US treasuries has declined now from 35 to 25%. But coming back to 2008, just this, 2008, we had a huge crisis in the euro-dollar market. It has nothing to do with euros, but the financial system is so complicated that everybody thinks how it works, but it looks like we have several monetary systems at the same time. A euro-dollar is an offshore dollar, and it's huge. It's the backbone of international finance. 90% of global trade is financed with eurodollars. Why? The eurodollars, offshore dollars, are not under the jurisdiction of the Federal Reserve. It has minimal regulation, and it's cheaper. If you borrow a eurodollar, it's much cheaper than an onshore dollar. So what everybody does, all banks, especially non-US banks, they borrow eurodollars, and then they invest via carry trade in higher yielding assets, and then leverage it up 20, 30, 40 times. And then, of course, when in 2008, it looked like the trust in the system was gone. And suddenly, banks refused to deal with each other. Cross-border lending froze. And we were staring an economic depression in the face. So what America then had to do was to bail out the rest of the world. What we were faced with was a huge shortage of dollars. And then, of course, we had unlimited liquidity swaps from the Federal Reserve to the whole world, including the Swiss National Bank, to the tune of tens of trillions of dollars. Nobody knows how big this problem was, but...
Are you not forgetting to use the charts?
Oh, yeah. But I'm just... I just wanted to go do this. Yeah, right. We have some charts, but I want to just point this out. What I'm saying is this happened 10 years ago, and it's happening again. We have a euro-dollar market that's much bigger than 10 years ago, and we have more stresses now. There is huge demand for liquidity, dollar liquidity, and they call that repos and everything that's short-term liquidity. So we have much bigger stresses now than in 2008. We're going to get a crisis that is much bigger than in 2008, but they're trying to postpone the day of reckoning till after the US election and after the Chinese Congress in 2021 and 22. It's the centenary of the Chinese Communist Party. So they're trying to postpone it, but it'll happen. And in the next 5 years are going to be the most interesting of your life. So what is happening is here, the US economy is supporting the world. Why? Because with 3% of the global population, it's 25 to 30% of global demand. So everybody wants to export to America. And the whole model of China was based on exports. They're turning their society to a consumer society, but that'll take 10, 20 years. In fact, the savings rate in China is now higher than 10 years ago. It's 50% because there's no social security. But obviously, this transformation from export to consumer can have a depression. That happened in history many times. And you see that every currency is trying to devalue against the dollar. That's been happening for 10 years now. And the last 2 years, it's accelerated. At the same time, what happened, of course, is that yields in global bonds, but especially government bonds, have collapsed. Maybe you remember all these so-called experts saying, yields will go up, and of course, then the value of bonds goes down. Rates will go up, and inflation will go up, and growth will go up. And look what happened. The opposite. And last year, I was especially positive on the US dollar, and everybody was negative, everyone was short. And of course, the dollar went up. Today everybody is predicting a lower dollar this year. But I think the dollar will break out on the upside. And the dollar has so much stresses that a higher dollar is very negative for the world, because 80% of the world's debt is in dollars. And it's terrible for the emerging markets. Everybody is recommending emerging markets. So this is going to be an interesting year. And again, the big breakout still has to happen on the upside in the dollar, but I think it's already broken out. And then there's, of course, the question whether the dollar will be dethroned as the main reserve currency. Well, there is no chance of that in the short term, but you never know. In the next few decades, something will come up. But I can tell you one thing, it's not China. China is a closed society. Their currency, the renminbi, is pegged to the dollar. They have capital controls. And they have huge debts, because the whole growth was based on a debt model. And now the last 10 years, China has closed even more because they have to deal with the debt. They are not ready for a global currency. And then, so I think that dollar as a reserve currency has actually declined a bit from 70% to 60%. It has nothing to do with the dollar. It's just that we have a different movement in FX reserves. In fact, when global trade shrinks, global trade has peaked. Then FX reserves decline. And then the question of fiat money, will that survive in the long term? Well, in history, that has never survived. But of course, we try to go on as long as possible. A fiat money system, so as money that's not backed by anything physical, like gold, that kind of system can only be replaced when you have to. You don't want to replace it if you don't have to. So in the 30s, they had to revalue gold in 1934, 70%. They re-liquefied the banks, and then gold was illegal in 1934 until well into the 60s. So, and then of course gold. There was the death penalty on owning gold in the Soviet Union. There was the death penalty of owning gold in Germany with Hitler. So, gold has been very controversial because it's the real money. It's the big competitor. Yeah. And this is what's happening. The monetary base is shrinking all the time globally. So we have a shortage of mainly dollar liquidity. And there are all kinds of reasons for that. But one of the reasons, of course, is that the central banks, after 10 years of expanding their balance sheet and stimulating everything, they have to normalize, because if they don't, at some point, people will lose confidence in their money, in their fiat money. Unfortunately, this has already led to a lot of pain. We had everything went down last year, except cash. Dollar cash went up, and the yield on dollar cash was only 2%. The last time that happened was decades ago, but then the yield on dollar cash was like 10%, 12%. So now cash was actually the best performing asset last year with only 2%. And so now what's happening next? Well, now of course central banks have hit the panic button and are trying to have a pause. But of course they're not happy, because the balance sheet is still 5 times as large as 10 years ago. Now they have so many assets they want to get rid of. And then the rates are only 2.5%. A typical normal rate would be 5%, because with the next recession, you want to lower rates 5%. Now, you cannot really lower rates anymore much. Well, they can. And what you have to do then, if the recession is there tomorrow, you're going to lower rates from 2.5% to minus 2.5%. Can you imagine in America? That will be very difficult in America, because you have there a huge money market fund asset class. Everybody borrows from the money market funds. If you have negative rates, can you imagine what will happen? I'll tell you, we'll have capital controls. But all in all, I don't think the central banks becoming dovish is going to mean much for the short term. The short term quantitative tightening, which is shrinking the balance sheet, is going to continue for a while. And the Fed will stop in September, but in October they will switch the mortgage-backed securities to treasuries. And then who knows, if things stabilize, they may even increase rates again. But it's obvious, and of course the European Central Bank is in total panic, and they looked like they've changed completely, but they haven't. They also have to be careful, very careful, but they want to save the euro and the eurozone. So, but then again, Italy is in a recession. Germany looks like going into a recession, and this is totally unexpected. But of course, it wasn't unexpected. But yeah, next one. Now, this is only money velocity in Germany in 2023. Yes, there have been a lot of hyperinflations, but mostly in exotic countries. And this happened in Germany only because they couldn't pay the war debt, the debt of the World War I. The Treaty of Versailles was terrible, all because of France. America was against it. But anyway, so you saw that we had deflationary money velocity in the 20s until they panicked. And then, of course, we had hyperinflation. But then we had Hitler, see? So, and we have many hyperinflations in unstable countries, but not in countries that have a history of discipline. We've never had hyperinflation in Holland. The last hyperinflation in America was a few hundred years ago with the Continentals, which financed the War of Independence. So people have forgotten that. Yeah, the next one. And here's the possible fireworks of the dollar. The dollar index is 57%, is a basket of 57% euros and a few others. And then you see it's trying to break out to through the 97.5. If that happens, we get unbelievable fireworks. And of course, it's terrible for the world because, again, most of the world's debt is dollars. So everybody is trying to keep the dollar from rising. But it won't happen because there is a huge shortage of dollar liquidity at the moment. You can see that everywhere. Yeah, the next one. Here you see a short-term chart. And are we going to break out now, or are we going to first go down and break out, or are we going to break out at all? But I'm just waiting for another 30% increase in the dollar index. Yeah. And this is the euro. Obviously, the euro is in a free fall, and my objective is $1. And the reason is that the euro is not really a currency. It's not an integrated monetary zone because we have had 150 monetary unions with different cultures, and they all disappeared. The only monetary zone that is sustainable is when it's one country with solidarity, and then even then, you know, like it took decades in America to have a monetary union. But in the Eurozone is just a political project. They try to keep it alive. Well, I predicted the first Euro crisis in 2012, and everybody laughed. Then it happened. And what happened since then is that the euro as a reserve currency has declined from 27% to 20%. And so this is all part of the strengthening of the dollar against all the currencies. Yeah. This is just a chart of low rates. Yes, the rates are very low, but look at history. We had many periods of decades of low rates in the past. Yeah. This is my most successful investment, the 30-year bond, treasury bond, because as you may remember, we had 20% interest rates in 1981. So we had a 38-year decline of yields in treasuries. And when yields go down in bonds or treasuries, the price goes up. So if you had bought the zero coupon on the 30-year, that went up, had a return of 15% a year, every year. There were intervals, of course, but on average. But everybody hates treasuries, everybody hates the dollar, and they, of course, missed the boat. But the best is still to come, because I think that the 30-year treasury yield will collapse to 1%, 1.5%. And maybe, well, hopefully not negative. But look what happened in Europe. The bond yield of the Bunds, the German Bunds, just collapsed in the last few weeks. And of everything. Even the bond yields in Italy have collapsed. You know, but of course they're all in the Eurozone. So, but as soon as the Eurozone would ever split up, you'll have hyperinflation in Spain, Italy, and in those countries, and France will have a lot of problems. But that's why they will try to keep it together. Well, you never know how long it will last, but every monetary union with different cultures has collapsed. But some are holdouts, like the Roman Empire went wrong from the start, but it lasted 500 years. Unfortunately, our life is shorter than that. Yeah. Here is another chart of this wonderful yield decline. Again, a lot of people thought, this bull market is over. Yields are going to go up. And they collapsed again. I was so alone, and I was one of the very few, I'm sorry, I'm very proud of this. I'm of the very few that said, no, yields will decline because we have so much debt in the world. If you have a lot of debt, excess debt, you have like $250 trillion worth of debt in the world, which is 300%. Everything above 100% as a percentage of the economy slows down the economy. So more debt means mostly unproductive debt, because most debt doesn't earn a return of, or is payable. So anyway, it all came through. Just in the last few months, we saw a collapse in yields because suddenly people realized the growth in the world will be disappointing. Inflation collapsed. Inflationary expectations, the swaps have collapsed. Now we're in the end game. Yeah. Here is the Japanification. Yeah, all this happened already in Japan. Japan is 10, 15 years ahead of us. See, what Japan had was a huge boom in the 80s. And they bought up the whole world, just like China did just now. And so America at some point said, well, enough is enough. You're going to have to devalue the yen. No, you have to revalue the yen. Sorry about that. Revalue the yen in 1989, 1990. So as soon as the yen revalued, you had a total collapse in Japan of stocks and real estate, everything. And even now, 30 years later, you have actually deflation in Japan. And of course, their demographics. The number of old people in Japan is much bigger than the rest of the world. So in Japan, real estate is still close to 50% lower than 30 years ago. Stocks are 30% lower. And the best investment has been the Japanese government bond, JGB. And of course, all these traders were speculating against that. They thought the yields will go up. No, yields collapsed. Most of the government bond market is negative rates, negative yields. Why is that? Well, when people are fearful, the first thing they buy is a government bond, because the government can get all the money at once. It can tax you. See, if you buy a corporate bond, that's different. Corporations go bankrupt all the time. 90% of the corporations go bankrupt every 100 years. Some big names are now going bankrupt right now. Where is General Electric a month from now? Where is Deutsche Bank? So all these things, government bonds are considered a safe asset because the government can do what it wants, will always get its money. And they will tax you. When in Holland we had a tax on windows, so you try to get rid of your windows, all with concrete and everything. Yeah. This is the dollar index again, a little different. You see, it's all building up. And we're waiting for this breakout. Short term, I think it's broken out already. Yeah. Now, this is what's happening. The Federal Reserve, since 2015, has been selling assets and unwinding the quantitative easing, the stimulus. And you see, now it's 50 billion a month. It will continue till September, and then they will pause. We'll have to see. But this was already very painful. But again, the balance sheet is still way too high. But you know, if things get worse, they may increase the balance sheet again. They may, but that is very, very dangerous. Everybody knows what happened when we had quantitative easing. We had increase in inequality, because it means that you have asset inflation. Normal inflation didn't work because, of course, incomes of the middle class were declining for 20 years. Your commodity prices have gone down 60% in the last 10 years. There's no inflation, there's overcapacity, everything is for sale. But asset inflation, people who have assets, they got a good feeling. But if you now have quantitative easing again, it may happen. You'll have a revolution. You'll have yellow vests everywhere, because there are 25 billionaires in the world. They own as much as 3.8 billion of the world global population. This is like stuff for revolution. People know that. Again, to have QE again, QE, you have to go down the a road of QT. And again, Americans have a different mentality than Europeans. I've lived in America for many years, and of course I've lived in England now for 40 years. But the mentality in America, especially, is if you have a problem, it's your problem. We're not going to bail you out, although sometimes that's why what happened in 2008 was a surprise. But let the chips fall, and so that's why everybody plays in America. If you go bankrupt, you're out of bankruptcy in 1 year. In Europe, if you're bankrupt, you have a stain in the rest of your life, and it can take 10 years to get out of it. But in America, everything is written off after 1 year, and you can start again. A lot of people start again all the time. And that's the way to keep the society going. If you are living with a lot of legacy debt and everything, you won't have any growth. So, yeah. And then the euro, that's another chart. We're on the way very clearly. And a lot of people are still positive on the euro, but of course now they're turning because the economic data of Europe are terrible, and that's all because of China, and because Europe is so dependent on world trade, and more than 30% of GDP. In America, it's only 13% dependent on world trade. It's a huge market and a very rich market. The average net worth of an American is close to $50,000, $60,000. And in most other countries, it's half or much less. So everybody wants to export to the US. But Europe has another problem, that the economy of Germany was based on superior quality. And now China is also making, well, they think, superior products. So, yeah. Oh. So, every country has a China problem. And Germany suddenly is faced with the fact that, they're not, they have to probably change their course somehow. But again, China in general is more quantity than quality. I hear that 70% of the buyers of electronic vehicles in China are unhappy because a lot of things don't work. So, but I can buy a Rolls Royce in China for a fraction of the price, and it looks pretty good. Of course, I don't want to drive a Rolls Royce, but yeah. Now, this is, of course, what happened in the US monetary base. In the panic of 2008, we had this huge increase in assets to stimulate the economy. In China, this was even bigger as a percentage of the economy. Now, if you have quantitative easing, you can do this once, but you cannot keep on doing it because every time you have diminishing returns. And at some point, and there is another problem, if you have a lot of debt and you increase the debt, then most of the debt is unproductive. So at some point, the velocity of money will collapse. We already are at a level, velocity of money has collapsed to a 60-year low. Velocity of money is that the amount of times that you spend money. And you spend a lot of money if you're optimistic and if you need things. But we're in a world of overcapacity. And so even if you have another quantitative easing, the effect now, since 2008, we had, of course, QE2 and QE3, and we may have QE4, but it will have no effect at all. And no effect on the economy. Because we had no economic growth, we have no inflation, because in 2012, I was at a gold and silver conference in London twice, and all the big names were saying we're going to get hyperinflation. But no, quantitative easing is an asset swap. It's not printing money. It's providing liquidity in the form of reserves to the banks. Then the banks can do something. They can make loans, but they don't because all their clients have too much debt. And there's no demand for more debt, for more loans. So they speculate. So they put it into stocks, and they put it into real estate. And we've had this process going on for quite a while. Yeah.
5 minuten.
Yeah. Oh, yeah. Now this is the long-term chart. If you update it, it has already broken out to 97.5. And then, the following. Yeah, the euro is in a free fall. Yeah, the following. Yeah, that's the velocity of money. Again, the velocity of money has to go up in order to get inflation. Yeah, money has to become a hot potato, like in Venezuela. They have inflation of 1,000%. But you cannot have helicopter money without changing the law. It's against the law in the developed countries. So, but you can, of course, have helicopter money at some point, and that's the end, because, the new generation wants universal basic income, free education, free healthcare, MMT is called. No, if you have that, it will never happen, in my opinion, in America. It may happen in Europe. But if you have that, that's the end of the currency, of course, because that's helicopter money. Velocity money will shoot up, and that's the end, because people will not want to hold money. It's a hot potato. But anyway, we're not there yet. I don't think it's going to happen. Yeah. Another one. Yeah. That's the big devaluation, yeah? Yeah, the dollar versus gold, there is, of course, a correlation. Higher dollar and lower gold prices, but don't believe in correlations. We could have a situation that the dollar goes up and the gold goes up as well. There are 10, 20 factors determining the price. So don't look at correlations. Everybody does it and then invest on the basis of that and then leverage up, and that they always will hit a wall. So I think it's perfectly possible that gold prices do go up, yeah? That's it, right? Yeah. Another one? Yeah. Yeah, that you see another chart of the US dollar, which is technically speaking, beautiful formation. So again, I'm waiting for the big fireworks. Yes? Well, this is what's happening. You see, the Fed has increased rates since 2015, and they have shrunk the balance sheet since 2015. So this is the pain that we've been through, and that's why last year there was total panic in December, of course, and there were other reasons. But now the question is, maybe we have a pause, but what is the next phase? And I think that in the next few years, they will try again to normalize monetary policy because they have to. Yeah. Oh, this is interesting. Everything in life has a cycle. And we're at a peak of the credit cycle of the last 75 years. It's just a matter of when it unravels. Every company has a cycle. Every life has a cycle. You know, my glory days were probably 25 years ago, and so I'm in decline since. But this is something that you have to pay attention to because the whole world will adjust and then start again. We will, of course, get rid of all the debt at some point, somehow. But it will. You cannot print your way out of it. You know, the total debt is 250 trillion. The stock market value in the US is like 40 trillion, which is 200% the value of the economy. You cannot print your way out of it, even if you print a few trillion. It doesn't matter. You cannot print your way out. And this is what I think is going to happen. After this peak where we are now, we will have 5 to 10 years of, you know, stock prices will decline 50%. Real estate prices will decline 50% all over the world. It's already happening. And then we will have stagnation just like Japan. But even in China, the number of people working in China has been declining since 2012 because of the one-child policy. And there is a huge overcapacity, 64 million empty apartments. You have ghost airports, ghost cities everywhere. And of course, now they admit to have falsified their figures. And if you ever talk about that, you go to a communist re-education camp. So this is what we're faced with. Brace yourself. Be prepared.
Okay, Diederik, give it up for Diederik. Diederik, I don't think you are in decline, really. We now have 15 minutes for questions, and then we go to the break. So Annie and Guido will come to you.
Oh, ja. Goed dit dan?
Nee, is goed.
Oh.
Oké. Eerst druk. Eerst druk. Oh, oké. Ja, of anders eerst Stefan.
Mr. Schmull, thank you for your presentation. Could you comment a little bit more? About your explanation about quantitative easing being an asset swap?
Yes. There is a lot of misunderstanding about that. But what is, the banks have a lot of bonds and they're more or less illiquid. So what the Federal Reserve is doing is buying up the bonds and then give bank reserves in return. Bank reserves is not money. You cannot just go to the supermarket with that. No, you have to go to the Fed with the bank reserves, and only banks have an account at the Fed. So then the banks, of course, can do anything they want with all these bank reserves. And that's what they did. They speculated with carry trades, and that's why the market went up 400% in the last 10 years. And of course, we had a huge bubble in real estate everywhere. I mean, in London, you wouldn't believe you have to pay millions for, or had to pay millions for small houses and everything. And that happened in Canada. It happened in Australia. It's all unraveling. The peak was in 2014. That's when very expensive properties declined in value. And now it's accelerating. And the market is, in Australia right now, is frozen. You cannot do anything. So that is what happens. Real estate is illiquid. And there is, of course, a time that it just goes up and up and up to unbelievable heights. But again, quantitative easing is an asset swap. It's not printing money. But if you look at all the debt, there for every dollar, there is 20 times as much debt. So you have a tremendous short on the dollar, because if you have dollar debt, a debt in dollars, you actually speculate on the fact that the dollar will go down. But if the dollar goes up, at some point you have to cover. And so in the next crisis, you have to cover. That's why in 2008, the dollar went up sharply. And of course, gold went down 35%. But that was temporary. Then it recovered because, of course, then they had the big stimulus. But in a crisis, you have to sell everything because you get a margin call from the bank, and you sell everything, and you want to get dollars mainly, because that's 88% of the world's transactions in dollars. 50% of all the banknotes are 1.6 trillion is in dollars, and they're outside of the US, by the way. And then 40 to 50% of all the import transaction is all dollars. And of course, reserves, 62% is in dollars. So, yeah.
Okay, next question. Same question. Same question. Can I make a comment? Diederik, I would like to make a comment on your response because I do not agree. You say that, I understand your question. You say that quantitative easing is just an asset swap.
Yeah.
Where does the stuff come from you swap it with that is also printing money? But we have a different definition. You think that printing money is helicopter money.
No. Maybe I've been clear. Of course, the Federal Reserve buys up the bonds with money out of thin air.
Aha. So your question is answered.
But the monetary base stays the same. So the money supply doesn't increase because you exchange one asset for another. So a lot of people think, oh, the monetary base increases. No. So yes, the money is coming from thin air because the Federal Reserve can do anything. But it's not.
How is it that the monetary base does not increase when you add money?
Yeah.
I don't get that.
No, because you can just look at the figures. Yes, it's money out of thin air,
Okay.
but it doesn't increase the overall monetary base.
Because you buy debt,
With it.
was already existing.
Yeah.
So you
Already
exchange that.
Yeah.
So the debt is.
But helicopter money would increase the monetary base. And again, there are strict rules of the Bank International Settlements against helicopter money. You can use helicopter money from time to time when there's a war or something. And that's what happened after the World War II. Yeah, they did it for a while. But then it's unwind. And then, of course, the war debt, it took 30 years to unwind. And so all very strict. But
The bankers caused the war, so
Yeah.
they planned that ahead. Okay, thank you. Clarification. Next question, please. Yes.
I was wondering if the Fed can just start with QE again when the stock market and real estate collapses.
again,
And why will it not work? Because in Japan they also don't.
well,
succeed.
exactly. Japan is a good example. They have QQQ in Japan. So unlimited quantitative easing in Japan, because of course you have the total debt in Japan is like 500-600% of GDP, which is huge. But Japan used to be is still a very rich country, and it's a creditor country. So that's why they have gone on for 30 years. But they have to keep on printing money. But of course, it's not printing money. It's what the Bank of Japan has done. They have bought half of all the treasuries, and they sit on it until they expire. It's a way of canceling the debt. And then, of course, they have negative rates everywhere. And So they can go on for quite a while because they have, the savings rate in Japan was always very high. And then, people above 50, they don't spend. So in Japan, you have a huge class of old people who are actually creditors to the world. Japan is a creditor country still. So what the end game is in Japan is, of course, the big question. They can go on until they can't. And,
When
it's
is
all,
that?
huh?
When is that?
Well, it's all a matter of trust. You see, when the debt to GDP in Argentina was 45% only, they went bankrupt. Every country is different. At some point, confidence is gone. And you never know where it will happen, but you can say, if you're in Italy and you make some money, you don't leave the money in Italy. You go immediately and buy a German bond. That's why you have such capital flight from Southern Europe to Northern Europe. And that's why the bunds are in short supply. Everybody wants bunds and the Dutch treasuries. And they're not there. That's why you have negative rates. And it's getting more negative. In the last 6 months, the amount of negative yielding bonds has increased 60%. It's amazing. This is a crisis. I'll tell you, if that happens, the market is telling you there is a crisis coming. Oh.
But do you think the Fed can
maybe-
just do one more time?
Maybe we'll go to the next question, and you ask the
sorry,
question in
yes,
the
apologies.
Yes, I have also a question about the two charts which are in front of us. The first one, you look at the period 1935, 19
Oh yeah.
for the S&P real. It's the period wherein the interest rates in the US cut from 3% to 14, federal
Yeah.
funds rate to 14,
Yeah.
for 20%.
20.
Yeah, 20%.
Excuse me. And the last chart is the same, and you say it will repeat itself. The S&P will decline. But this period is one with interest rates from 20, real federal fund rate, till to 0 now.
Yeah.
So it's the opposite. You say in your presentation that you think the best investment will be government bonds, but if it will repeat itself, it will revert
Yeah, I see what you mean.
to the mean. So we got inflation in front of us.
No, we have deflation. They're trying to keep deflation out of the door, but of course it's already deflation everywhere. But I see what you mean. Here you had the big inflation of 15-20%, rates going up, and then of course in real terms, after inflation, you made no money in the 70s in stocks. Now. This could happen, but because this could happen in the S&P because of deflation, not inflation. I don't see inflation anywhere.
Will interest rates ever return in our life?
Will ever?
Because you think when it will be deflation, interest rates will keep also in the future around 0 or below 0, but never go up.
No, you could have 10 years of low rates or negative rates. And it looks like,
But it will return, or
well,
is Mr.
after
Mr.
the
Gates-
crisis, we will have a huge crisis, bigger than 2008. Everything will crash, including rates will crash. We'll have negative rates of 5%, 10%. Yes, that is confiscation. That's what they do. It's much worse than financial repression, which we've had so far. We're going to have confiscation of assets, yes.
Mr. Rogoff, I think. The scenario of Mr. Rogoff.
Yeah. And that is something, brace yourself, yeah.
Last question? Two questions. My first question is, are we in this scenario because of the stupidity of the financial world, or is it due to something purposely done?
Due to this,
Something purposely done. So is it stupidity?
Oh, I see.
Purposely
Okay.
done? And my second question is, can you tell us about ethical behavior of financial bankers, investors, and alike in your time and now?
Oh, okay.
Can you repeat the question?
Yeah. This, whether there is this all happening on purpose. Well, see, human nature is very strange. All that counts for the average person is money and power. And they'll do anything to get that. So the monetary system changes every day. So you'd never know what it looks like, but they always try to find ways to make a profit, to make a return. And that's just human nature. It's not purpose. On purpose, there of course is an elite who would love to like money. I heard there was a meeting of hedge fund managers last week, and they would love to have an indictment of Trump, you know. And then, of course, the market would go down because they are short the market. And that happens all the time. It didn't happen, of course. But yeah, you have elites who want to speculate on certain events. War is another thing. It's one of the most profitable games people play. Drugs is even bigger. So everybody plays it, including Secret Service. So this is just human nature. And then, well, the current financial sector is totally different from when I was there for 40 years in the 80s and 90s, which was the tremendous boom. But that was because that was the big financialization of the world. And it's peaking. It's now declining because obviously the financial sector was tiny in the 70s, 60s, 70s, tiny. Everybody said, you're crazy to go into the financial sector. Go to Shell, go to Philips, go to whatever. I said, no, I love markets. But of course it was terrible at the time. And then it expanded. We had then no exchange controls. You know, in England there were exchange controls for 35 years. Then Maggie Thatcher came, and then Ronald Reagan, and then you had the big boom. That's all over. Now, we're going the other way. We're going to get more capital controls, more tariffs, where the world is going to be more protectionist. This is this is like the 30s, 1930s. And then the people in the financial sector now are totally different. I'm lucky to have gone the upcycle. But now, if you're in the financial sector, you have to really be a believer and do in a special niche. But the sector is shrinking dramatically. Just a merger with Deutsche Bank and Commerz will mean 50,000 people less. And it's just happening all the time. But that's very normal. That's what happens all the time. When something has a boom, there is a bust.
Okay, and with that, thank you again for your time. Give it up for